Trading in the financial markets can result in the loss of the amount invested. Do not trade with funds you cannot afford to lose, and seek advice if you do not understand the risks. All information is provided in this webinar is for educational purposes only. ETX Capital and the presenter are not financial or investment advisors, and we do not recommend any securities or instruments of any kind. And for those of you that don't know much about ETX, we are a fast-growing financial services company based in London. We are authorized and regulated by the FCA, the Financial Conduct Authority, and we're also a member firm of the London Stock Exchange. When you trade with ETX, you can start out on our ETX binary platform, a great place for beginners, where you simply have to decide whether an asset will go up or down, and your investment is the maximum you can lose. In other words, if you invest 50 pounds, you can either lose the 50 pounds or get back the 50 pounds plus the prearranged profit. There's no leverage or margin on binary options, so your risk is only the dollar amount you type into the screen. If you want to trade spread betting, CFDs, or Forex with ETX, you can use our ETX Trader Pro platform. You just simply log in and use our web-based trading with our advanced charts and get the lowest possible spreads. Or if you want to move up to a more professional style trading, you can download our ETX MT4 platform and trade from that, where you can automate some of your trading, use the advanced charts, and actually attach expert advisors directly to the platform. You decide what you want to use, how you want to do it. With ETX, it's all up to you. Now, this month we have a lot of new webinars on the schedule, so go over to ETX Education and check all the classes that are scheduled over the next month, and make sure you sign up and come for them. We're looking forward to seeing you. So moving into this week, we see a lot of the assets more or less on the bear side because we're expecting the US dollar to regain some of his lost momentum. And then over the longer period, we're expecting most assets to be trading sideways. And then moving in towards the end of the month, we expect, again, a mixed bag of tricks. Now, there are a lot of events on the calendar this month. So just for the beginning of the month and top level events, you can see we have the Rba Rate Interest Decision, we have the non-monetary policy ECB meeting, plus we have the ECB policy meeting accounts. We have this week, on Friday, we have the biggie, the non-farm payroll report. Then we have the FOMC minutes this month. We have retail sales out of the US, consumer confidence, and a lot of stuff. You can see there's a lot of major events, but the other big event we have coming up this month is Sunday the 22nd, a speech by Mario Draghi. And then we have the big October meeting on the ECB. And we also have a big Bank of Japan meeting coming this month. Now, this week, being the first week of the month, we have a lot of events on the calendar. Not that many top tier, but lots of secondary events. Starting later tonight, we have out of Japan the big Tankan manufacturing results and the outlook. Moving into tomorrow, we have a lot of events out of the EU and a lot of events out of the US. On Tuesday, we move into the Rba Rate Decision. Then following on Wednesday, we have the ECB meeting, the non-monetary meeting, and we have the ADP jobs report. That is the precursor for Friday's, the Friday's NFP report. On Thursday, we have the meeting minutes from the ECB last month. We have continuing jobless claims out of the US. We start having some Federal Reserve speakers back on the calendar. And then Friday, we go into the big events of the month. We have the non-farm payroll report out of the US, we have unemployment and the jobs report out of Canada, and then we have two big speakers out of the Federal Reserve. Everybody's talking as we get ready for the October meeting, the FOMC and the ECB meeting. So this week kicks off with some major events in the shape of the biggie that's going to affect the Eurozone. Will be this Catalan referendum for independence in Spain that's already starting to make all the headlines. Other major events, we have UK Purchasing Managers Index. And then on Wednesday, we have the US ISM Institute of Supply Management reports. Finally, on Friday, we have the US jobs data, with Friday's non-farm payroll report providing the usual must-watch event. Now, corporate news, by comparison, is relatively thin this week, as we wait for the next US earnings season that will open up very shortly. Now, the US dollar held its ground in Q3, which ended officially yesterday. The first week of the last quarter features the all-important jobs report with the full build-up this time. In addition, we have a rates decision out of Australia, jobs report out of Canada, and let's go to the highlights for the week. Now, remember, another Eurozone negative is looming, and that's the Catalonia referendum, which Spain says is illegal and is trying to impede. Today, there are lots of mess out of in today, and yesterday with the police raiding voting stations, closing them down, but it seems like the vote has started. Political disarray should be the Euro negative, Bloomberg reports. Investors so far have shrugged off what has become the gravest constitutional crisis to befall Spain. Now, this is not the first time Catalonia has wanted to declare independence. We doubt very much if it'll happen. But nobody was prepared for Brexit either. Spain's benchmark IBEX 35 index has outperformed peers this year, and so the Spanish stock market is doing quite well. So let's look at the top tier events in order this week. Okay, so we're going to start off with the Rba Rate Decision, and then we have inflation reports out of the UK, and we have the BOC rate statement and the BOC Bank of Canada interest rate decision. Again, on the corporate front, it's a quiet week. We have a couple little odd and end things going on in the UK, but nothing. I think IG's reports are coming out. One of the major supermarkets have some stuff coming out, but political news could weigh heavily on the exchanges this week. Though the greenback had a bad start of the year, poor growth and scandals hurt the US dollar. Hopes for fiscal stimulus faded with the repeated failure to repeal Obamacare. Despite 2 rate hikes in the first half, the dollar still shrugged, which is very important and very unusual. Other economies outperformed America the first half of the year. The second half already looks a bit different. Economic growth reached 3% annualized, and the Fed seemed to stick to its plan to hike rates 3 times. So that means we have one more rate increase coming over the next 3 months, either October or December. In addition, Trump's tax plan inspired the markets despite its lack of details. And the markets are still trading very, very high. We haven't seen much of a reaction to the mess out of Korea, but headwinds come from the political scandals. It's been unbelievable what's going on in the U.S. I mean, we've had another Health and Human Services mess step down, and it seems like Trump can't even keep any of his cabinet members or secretaries online. They've had such a turnover. So if the mystery persists and wages do not accelerate, Janet Yellen and company could refrain from tightening farther. So this week, the big push is going to be the U.S. non-farm payroll report, which is published Friday at 8:30 Eastern Standard Time. The U.S. economy is anticipating to have gained about 100,000 jobs due to the disruption caused by Hurricane Harvey and Irma. The unemployment rate is forecast to remain at 4.4%. Fed Chair Yellen has continued to push for a gradual rate hike despite stagnant consumer spending and low inflation, which has increased the probability of the U.S. benchmark rate. And this is why we want to listen very closely before Friday to what, I think we have 4 different Fed speakers on the calendar. Now, the U.S. dollar rebounded against majors at the last week of September. Hawkish rhetoric from the U.S. Federal Reserve and the Trump administration tax reform boosted the greenback ahead of a busy week. Geopolitics continue to play a big part in the daily trading, with the situation with North Korea still developing. So let's go look day by day at events. So Monday, again, we start off, whether we call it Sunday night or Monday morning, depending on where you are. Out of Japan, we have the Tankan Index. 9:30 tomorrow morning, we have UK manufacturing PMI. 10 a.m., we have Eurozone unemployment. At 3 tomorrow, we have the biggie, which is the US ISM, Institute of Supply Management Manufacturing PMI. So we're expecting the first hint towards the non-farm payroll report has been quite upbeat in recent months. The score in August was 58.8, reflecting robust growth and beating expectations. If we get a high number or a good number out of the manufacturing, that means manufacturing was hiring. That means we're going to see probably a good number on the jobs report on Friday. So the ISM manufacturing PMI report is one of the first indicators we're going to look at to see. But on the other hand, there might have been a drop because of the hurricanes. We have yet to understand and know exactly what the hurricane effect has been. So Tuesday, we get the Rba Rate Decision. Okay, we're not expecting any changes. We get Japanese consumer confidence. Japan is in a little uproar because Prime Minister Abe called for snap elections, and a poll that came out this morning actually showed that he has lost a great deal of support. And so these elections might not be so supportive of him. He stays as Prime Minister. He's just calling for elections in the House. And then we get UK Construction PMI, Purchasing Managers Index, which is a very important report for the UK. So again, we have first thing in the morning, Australian Rate Decision. The Reserve Bank of Australia is firmly in neutral. In a recent public appearance, the RBA Governor Philip Lowe reiterated that interest rates are set to remain stable. But he might talk about the exchange rate because as far as they're concerned, anything above 75, the Australian US dollar is trading too high. So then on Wednesday, we move to the third part, UK Services PMI, which is the important PMI for the UK. Construction and services are the most important for the UK. And we're expecting it to fall to 53 to 53.2, but again, anything over 50 is still an expansion. Then we get US ADP employment report, which is a precursor to Friday's non-farm payroll report. We get US ISM non-manufacturing PMI, and we also get the crude oil inventory. So the service sector is the largest in the UK, and this purchasing manager index has a big influence on the pound. The score dropped to the 53 handle in May and hasn't really recovered since then. At 53.2 in August, the number reflects modest growth. It is now projected to tick up to about 53.3. Watch it because it will have an effect on the pound. We also have ADP as the largest software provider for payrolls in the US. And its report always moves markets, even if the report is not always echoed in the official jobs report the following Friday. In August, ADP reported a robust gain in jobs, 237K, beating expectations. A much lower number is forecast, only 151K now. Again, because we're dealing with the end of summer jobs and we're dealing with the hurricanes. We also have on Wednesday the services sector out of the US, the non-manufacturing PMI, and the service sector in the US is tiny as compared to the manufacturing sector. The indicator has been quite volatile in recent months, but reflects okay growth of 55.3. That's a good number. Again, 50 is the divider between expansion and contraction. A similar figure is estimated for September at 55.5. Also, we have a speech by Janet Yellen on Wednesday. The chair of the Fed delivers opening remarks at a conference in St. Louis. She is not expected to address monetary policy, but she could talk about inflation, which could lead us to some assumptions. Yellen managed to strike a fine balance and did not add much onto what she said at the last rate decision. Thursday, the calendar's not so robust with top-level events, except the U.S. trade balance report, which is due out, and we have the ECB minute meetings report from the last ECB. Okay, in its recent decision, the ECB told us that it will probably make a decision in October, 2 weeks from now. So that is going to be the overall controlling factor of the euro over time. But people will shred apart this meeting minutes report to see if they can read any more into it than what Mario Draghi has told us. Then Friday, we go into the biggies. We have the U.S. non-farm payroll report, we have Canadian unemployment, and we have Canadian IV. So the jobs report in August, slightly disappointed. Only 156,000 jobs were gained, less than expected and less than the average. A lower gain in jobs expected for September, around 88,000. And this is also related to the effect of the hurricanes. Wages were up last month by 0.1, and we're more concerned right now with wage growth than we are from changes in employment, because we have almost full employment. Okay, a rise of 0.3 is in the cards now. The unemployment rate rose to 4.4%, and it's not expected to change. It rose from 4.3 or 4.2 to 4.4, which is nothing. Anything in the low fours is a good number. And sometimes statistical anomalies, or the end of summer when summertime workers get laid off, the students return to school, they apply. All the extra, replacement workers are hired for hotels because everybody's on vacation. They get laid off. That has a small bump in the numbers, but it doesn't really change anything. So wage growth is no less important than the gain in jobs. The Fed still intend to raise rates in December, but if the data is not supportive, they could certainly change their minds. Then we get Canadian jobs data. The Canadian jobs data is looking good in 2017. So, Canadian jobs market, back in August, the economy added 22.2 thousand jobs, and the unemployment rate dropped to 6.2. See, Canada's doing well with a 6.2 unemployment rate. U.S. only has a 4.4. What's that tell you about it? Okay. We can finally see some stability in job growth now. Okay. We also have on Friday a speech by Bill Dudley, the president of the New York Fed. Now, this speech is coming out after the jobs report and after the week's manufacturing data. So it might give us some forward-looking views on what the Feds will be looking at. He used to be a dove, but in general toes the line. Any hint about the timing of the next rate hike could move the markets. Now, our euro forecast over the next week is the euro lost about 0.992% over the last week. The single pair is trading at 11824, which is actually a very good number for the euro. Okay. And that was after central bank comments and the tax reform from the Trump administration. The referendum vote in for Catalonian independence is not a legal one, as Spanish courts did not approve it. But the government risks radicalizing moderate and undecided voters if it tries to intervene. Given the results of the Brexit vote and the French and German elections had so big at stake in the future of the Eurozone, investors will be tracking the Catalonia vote this weekend, especially with the shock in the UK, with May doing so poorly in the polls. We've got to be very careful what's brewing in the Eurozone. Now, central bank divergence continues to be one of the main drivers for the pair. The Fed's kept its main speakers on point, arguing for another rate hike this year. the market is now pricing a 70% chance of a December rate hike, but the US dollar is still very, very weak. By contrast, ECB President Mario Draghi is not ready to commit to removing stimulus and has pushed to October the details of his tapering plan. So we're not going to see that for another couple weeks. So it's not going to have much of an effect on the euro trading this week. What's going to have an effect is all the Fed speakers that are on the counter and, of course, the jobs report. Numbers come out good for the U.S., we're going to see the dollar climb. Employment data out of the U.S. starting with the release of the ADP on Wednesday, unemployment claims on Thursday, and the NFP on Friday. We could have a positive week for the dollar against the euro. There will be little European data on display with U.S. indicators and advances on the American tax reform efforts driving the dollar. So we're expecting the euro to just stay about the 118 level. Last week, you can see it dropped to 119, from 119.33 down to 118 as the dollar recovered a little bit of its weakness. Also, the other big data out this week is Canada. And the Canadian dollar, the USD Canadian dollar, the loonie, gained 1.09% last week. The currency is trading at 124.69 in a week that featured at NAFTA negotiations, central bank speakers, U.S. tax reform. The pair touched weekly highs of 125.33 on Thursday, only for the CAD to regain some ground, but still finishing low versus the U.S. dollar. Basically because the U.S. dollar was the stronger player last week. So we can see that the pair eased up, okay, just like the euro did in the euro dollar, because the dollar just gained a wee bit because the dollar was so weak. And that's where we stand for this week. We have a couple important events. We have some things we want to look at, and we have a lot of speakers we want to listen to. We want to look at those ECB meeting minutes. We want to listen to the RBA. We want to listen to Bank of Japan. And we also want to listen to all those Fed speakers on calendar this week and anything that's said in the ECB non-monetary policy meeting this week. So we have a lot of stuff that'll keep us busy, but keep an eye on U.S. manufacturing early in the week and ADP, and then it'll give you a precursor to Friday's jobs report and might be able to let you situate yourself on the right side of a euro trade. So thank you very much for joining us. Thank you for being part of the ETX family. This week's Wednesday class has been moved to Tuesday, and we're just doing a romp around the binary options platform on Tuesday, and then we'll see you back in class on Sunday. I think we also have one other class scheduled this week. Just go to etx/education, and you'll see all the webinars for the next month scheduled there. So thank you very much for joining us on this Sunday, and we'll talk to you all again during the week. Again, thank you for supporting ETX, and have a great night now. Bye.